The following content is not intended to be financial advice and should not be used as a substitute for professional financial services.
How can I take what I know, what I'm exposed to, and then share it with people who are interested and want to benefit from that same information? My whole career trajectory is really about relationships and cultivating great relationships. When those social platforms disappear, you have to go and try to find your people again and go build your audience all over again. I would not be where I am unless someone took the initiative to invest in me.
What's up, guys? It's your boy Ross Mack, and welcome to Financial Freestyle, your essential conversation aimed to empower through actionable insights, expert advice, and a whole lot of inspirational stories. Look, guys, we share the truths and motivation with the advice to do one thing, and that's economic prosperity and attainable to all. I got a very special guest with me today, man, Ryan Leslie, investor and philanthropist, man. Ryo, appreciate you being here, baby.
Brother?
Yeah, man. So, to the people here, first and foremost,
Yes.
I gotta always say thank you, give flowers, because one, you're a child prodigy, you're extremely talented, but we actually got a relationship that goes back a few years because we got to share the stage together. And at that time, I'm like, oh man, Ryan Leslie, and little beknownst to me, you are brilliant in all assets of life, bro. So I just want to say thank you for being here on my show, man.
Yeah, I mean, when we think about that first time that we linked up, we brought you to the city for a wealth plan event, a wealth plan activation. I think we had 750, 800 people that all came together. Shout out Marcus DeMoss to help us put that together.
Yeah.
And man, it was, I always appreciate someone that is really about walking what they talk.
Yeah.
And I had seen some of your content, and I said, hey, let's reach out. And you said, hey, it wasn't even a hesitation. You said, hey, we talking finance? I'm there.
Oh, my mama. So listen, obviously I know who you are, but to the people that was watching, who was Ryan Leslie, man?
Yeah. So I mean, I've worn many hats over the years.
Indeed.
Started young. Actually, I was pre-med when I was in college, and produced some of your favorite songs, hopefully some of your favorite songs.
Absolutely.
And released a couple of albums, Grammy-nominated for my second album, my sophomore album. And now, have run a technology startup, which is called SuperPhone.
Yeah, we're going to get to that for sure.
Also now running an investment club, which is really one of my most rewarding ventures at the moment.
And so wait, did you say pre-med?
Pre-med.
So wait, we're not gonna gloss over this because when you hear that, it's like, oh, all right. One, you were 15 going to one of the top schools in the world, right? Let's talk about 15 going to Harvard. Like, how does that even happen, bro?
Well, my parents are in the Salvation Army.
Okay.
It's organized like the military. I went to high school for 3 years. During those 3 years, I went to 4 different high schools. And so the next high school I was supposed to go to was actually out of credits for me because I was always accelerated. So they said, hey, for you to finish your high school credits, you got to go to community college. And my father had the vision that if I'm going to community college, let's just apply to regular college, if you will. So we applied, and when I say we, he really sat down with me, helped me write everything out, wrote the essays and everything. And 4 University of California schools accepted, and then we applied to Harvard, Stanford, Yale for the long shot. You got the admission packet when it's a big envelope, and it's a declination, or they've declined you when it's a small envelope.
Yeah.
We got the small envelope from Yale, but we got the big package from both Stanford and Harvard, so we picked Harvard.
That's dope, bro, because like when I was applying to school, they had something called the Common Application.
Okay.
Right? And you could literally, it was like one application to all the schools, and it was a few schools that didn't admit the Common App, and it was Princeton and Harvard, right? I say that to say I applied to Yale, Stanford, and then where I ended up going was Penn. But I'm always remiss that I didn't apply to Harvard, and the reason being is because it cost some money, and I was able to get free lunch in high school. And if you get free lunch, you could apply to college for free. So as long as it's the common application. So it was the ultimate finesse.
Okay.
But I always be remiss, and I'm like, dang, I wish I would.
We had a great time. I mean, I feel like you came to some of the Harvard Yale games, maybe. We had a great time.
Yeah, but it's nothing go compared to Penn, right? Got nominated as the not nominated. We won Playboy Party School of the Year, and what was that? 2012, 2013 year.
Okay.
So we was a party school. So out of all the Ivies, Penn was the one that was definitely partying the hardest. But as we continue to talk about who Ryan is, man, I think we are. I'll be remiss if we ain't say you one of those ones on the music side, like child prodigy, genius there, but also a genius in the music realm as well. But I want to talk about some things when we talk about music, because obviously you've been very successful, but I want to actually talk about your overall business acumen, because I heard you were able to make about $2 million with only selling 17,000 copies of your album. Let's talk about that if you get.
Yeah, I would say that my whole life and actually my whole career trajectory is really about relationships and cultivating great relationships. And when we think about being online and building our social followings, we're actually just renting that audience, right? Because if Facebook or Instagram or at the time was Twitter or Vine, which ended up just disappearing, when those social platforms disappear, you have to go and try to find your people again and go build your audience all over again. And so to do $2 million off of just 15 or 17,000 copies is because I actually knew every single supporter. And the way I did that was giving my phone number out. And that was a segue to building an actual platform to support that type of volume. So I got 150,000 people on text right now. Anybody can drop their number, leave their number for me at textryan.com, and I'm able to, based on the fact that we can layer intelligence on top of that important communication channel, it allows us to really, it allows us to be superpowers in terms of relationship building. And so I would say when we look at how I was able to do that with music and then replicate that for somebody like a Nipsey Hussle, right? Nipsey Hussle did the same thing, proud to pay and then mailbox money, 100 copies at $100 or 1,000 copies at $100 for 100K, and then 100 copies at 1,000 for that same 100K. And so, shout out my boy Nathan McCartney, he put me with Nipsey, and we talked and broke bread and shared concepts and stories, and he was one of the early adopters of the SuperPhone. And so I think really the secret to being able to make that much money was knowing every single supporter. And when you know every single supporter, you can shoot them a text, hey, I'm playing in your city. I'm doing something special, New Year's Eve party, pull up, and you're able to meet them at the price point that they feel is correlating to the value that you provide.
So let's actually segue more into SuperPhone, right?
Yeah.
Obviously you say this, what kind of led to that was giving out your phone number, but what is SuperPhone? How did you come up with the concept? And, because now you talking about being a big CEO now, and where is it today?
Yeah, so SuperPhone is a technology platform that facilitates exactly what I'm talking about. And you know what? It's nothing that's super extraordinary in terms of a concept, right? We've been doing this with email marketing forever. We collect emails because we want to have direct relationship with the people that follow us and support us and could potentially be customers. What SuperPhone does is it just extends that communication to the text message feed, which is kind of the most important real estate in everybody's phone. If you look at your email box, your inbox, how many messages are unread versus how many texts are unread. So building a platform that allows business owners, real estate agents, salespeople to actually have a better way to organize and manage the most important conversations in their life. That's really the vision of SuperPhone. We have a patent on a concept called never lose touch, which means that my phone will keep track of how long it's been since I've last reached out to someone, and if it's over a certain amount of time, my phone will initiate the conversation. And so basically I think that so many people, they have contacts that are just sleeping in their phone. and maybe they have followers, definitely got followers on social that are just sleeping.
You don't even see those.
Right, but the folks that actually make it into your phone, they say we only communicate with like 3% of those.
Wow.
And so a layer of technology to actually wake all those folks up, get those conversations going, you never know. Just being top of mind, that dinner invitation you're going to get to, that introduction that you're going to get. You know what, I was just talking to so-and-so and, you know, your name came up, or I thought of this because that text comes through and now you're top of mind. So that's really what SuperPhone is. We still kicking, superphone.io if you want to test it out.
Yeah.
And if you want to connect with me directly, like I said, textryan.com, you can see it in action.
If you had another, tech idea, would you look for venture capital, or would you text 150,000 people and say, hey, crowdfund, or do you want to invest? How would you think about that?
Yeah, I think that's a great segue, because now I'm mostly focused on making sure that people understand the power of ownership. And so that is what we did on our last round at SuperPhone. We actually did send that text out. We raised 300,000 of the 6.8 million that we did raise came from SuperPhone users and from that community of folks that was in the SuperPhone. So, and I think really it's about them having ownership and equity early stage. And I mean, you know better than anybody else, when you think about folks that have built incredible wealth over the course of their lives, it's because they had ownership stakes or shares in these companies when they were very early. And sometimes they have it because they're founder, sometimes they have it because they work there. But at the end of the day, that ownership is what really delivered that ultra exponential return for them.
I love that. We're about to take a quick break. You guys don't go anywhere. We'll be right back with Financial Freestyle. All right, and we back at Financial Freestyle with my dog, Ryan Leslie, child prodigy, Grammy-nominated, serial entrepreneur, big CEO, big tech investor, but also a visionary, right? And the reason I say that, man, obviously I know you're my dog, but I did a little research too, and I'm jealous because I ain't know you back then, but he was saying in 2013, pay me in Bitcoin.
That's right.
Talk to me about that, and more importantly, tell me why you weren't telling me in 2013 to go all in on Bitcoin.
It was publicly posted. It's publicly posted. So anybody that did their research, they would understand and know that I was basically just looking for a way to explore this concept of a decentralized currency, one that was built on a trustless system like the blockchain, and at that time was able to sort of redirect show advances, merch sales, ticket sales, direct-to-consumer sales, and do that all by actually accepting Bitcoin. And by doing that, it actually educated my audience of what Bitcoin was. If I said, hey, look, only way you can get this is via Bitcoin, that means that they had to go and get some Bitcoin in order to actually transact with me. And so I think we put a lot of folks on at that time, and we continue to put folks on. It's always been my modus operandi. How can I take what I know, what I'm exposed to, and then share it with people who are interested and want to benefit from that same information?
This past weekend, I want to thank you again. My dog Ryan came to Chicago.
Yes.
And was part of the Maconomics Wealth Summit weekend. We made history. We bought out the mayor. We had some world-renowned financial literacy professionals in the building. But Ryan came, and he was really telling us about how he got interested into the markets, right?
Yes.
I don't want to take your shine, but I sat in the audience and I listened to it.
Yeah.
Talk to us about, how you actually got interested in the markets.
Yeah, it really just came through a mentor. There was an example, a shining example of success. Someone who had taken a $15,000, initial starting capital and grown it to $250,000.
That's not no normal starting capital. What was the 50,000? What?
It was a student loan.
Student loans.
Yeah, a student loan.
This isn't investment advice to go take out a student loan, but this is who ended up teaching him. So
yes,
keep
exactly.
going, my bad.
And basically, had the ingenuity and had a mentor themselves that taught them how to navigate the markets to turn that 15 to 250, right? And so now, here it is, years later, I sat at the foot of a master to understand and learn how to do that. And when I did start making some money in music, I applied those exact same systems and strategies to make sure that the money that I earned was actually earning money for me and working hard for me. And so there are so many amazing nuances, especially now in modern technology. Back then, to see your stock quotes, you had to, look at the Wall Street Journal and see the quotes. You only saw them once a day because they were printed in the newspaper. But now you get real time. You have so much available to you in terms of the instruments that you can invest and use to trade and create income for yourself. And so it's a crazy maze to navigate. And so that's why we actually started an investing club. It's called a Wealth Plan Club, and man, it's been so rewarding over the years to work with folks the way that my mentor worked with me, to be able to help them to navigate the markets that way.
How would you say, right, if you were to go back in time and talk to a younger Ryan Leslie, right, what type of advice would you give him, or better yet, just a younger person in general?
I would say there's no need to have fear when it comes to being especially when you're young, fully invested. There's a pretty, I would say, poignant quote from Warren Buffett, and he said, "Look, if I was running $1 million or 10 million for that matter, I would be fully invested." In fact, he said that he could earn 50% in a year on $1 million, actually even on 10 million, and he said he feels like he could guarantee that. And I believe that, a portfolio size of under 10 million, which most of us are, if you're just getting started, Absolutely. Your portfolio 99% size is gonna be,
of us.
Right, under 10 million. There's so much opportunity when you know what to look for. And so that's the reason why I think, the Wealth Plan Club is such a labor of love for me, because it gives me the opportunity to actually work with people who are starting from that level. And it doesn't matter what age. I think for me, I was, 19 going on 20 when I sat down with a mentor. And I think when you look at Warren Buffett's story, he read The Intelligent Investor, and it wasn't enough to just read the book. He sought out the author. He moved to New York. He studied with Benjamin Graham. Then he came home. Even if he didn't have the money, he put the money together with family and friends. And then he proceeded to just whoop the market for 10, 11 years straight with no losing years. And I think that's actually possible when you understand what you're doing and how to have the right temperament and psychology and mindset and mentality when it comes to money in the markets.
So a week ago, we had an amazing guest, right? John Hope Bryant. And if you haven't seen it, you should definitely go watch it. But we were talking about why financial literacy is so important. And when you think about, your group, the Wealth Plan, when it comes to, you're saying what Warren Buffett would do, like there's a strong lack of financial literacy across the nation, right?
Right.
The vast majority of people aren't investing. More than half Americans don't even have $1,000 saved.
500.
You know what I mean?
Right.
And so the reality is, what is the Wealth Plan? What's your why when it comes to this?
Yeah, the why is I would not be where I am unless someone took the initiative to invest in me. And when we think about investments just in general, it's not just about buying stocks. It's also where you're putting your time, where are you spending your time. And there's a difference between spending time and investing time, right? We spend time scrolling. We can invest time learning.
Absolutely.
We can invest time in the relationships and the people that we love and care about. And when we invest that time learning, we can have almost a domino effect in terms of, it's a buzzword now, generational wealth, but we can have that real effect when we put our families on that trajectory. And I think a pretty staggering statistic is that, had everyone who started investing in the market when it first opened, there would be 140,000 some odd billionaires.
Wow.
And I think there's
that.
only about 400, right?
I can see
And the reason for it is because no one ever sat down with those folks and said, okay, this is how you keep it going, right? They say, okay, folks were thinking, and also I think the statistic is that in terms of generational wealth, the wealth that's passed on usually is completely squandered one generation later. right? So it's
Yep.
not just about leaving the money, it's also leaving them a structure, leaving them a pathway, leaving them a blueprint for what to do to keep it going. And so that's what we do at Wealth Plan. It's super high touch. I keep it very, I keep a low membership so that we can really dig in and provide the type of service that I felt like I got from my mentor.
That's epic. And you know, what I found was amazing is that you paid for that mentorship originally.
Yes.
Right, and I love what you say, right? We spend time scrolling, but we don't spend time, you know, learning.
Yeah.
So that's pretty powerful. So
Spending time and investing time, spending money and investing money.
Absolutely.
You want a return, you need to invest.
Absolutely.
You want a let's say a depreciating asset, you spend on it, right?
Yeah.
And so I think as I think about the world, the future that I would like to see, I would like to see folks that look like me having that kind of confidence and comfort when it comes to navigating the markets. And that's what we do at Wealth Plan.
No, I love that. So look, we got this amazing segment called Dear Mac.
Okay.
Right, where people can send in their questions, right? And so I do remember the question, but pretty much they were saying, listen, I started investing, I got my ETFs.
Okay.
What's next?
What's
right?
next?
In other words, they want to know, like, what should their overall portfolio construction look like?
Yeah. So I think that's a great question because that's what we address in our club. Some of our members come to us because they just are worried about growth. Others are worried about income. And so I think that when you look at the financial markets, there are ways to balance the two, where you can have money that's growing for you and you can have money that's actually throwing you off an income. Maybe that's in the form of a dividend, maybe that's in the form of a premium that you receive for a financial instrument if you sell it. And so basically, I think it's about getting with someone who knows what they're talking about and asking them that question and say, hey, how do I find that right balance between growth, because I do want my portfolio to grow, and also income, because when we can find that income, we can pull forward that concept of financial freedom. What is real wealth? What is real financial freedom? Well, it's when your passive or semi-passive income exceeds your active expenses on a monthly or annual basis. And so if you got some dollars invested, yes, that's great. If you're looking for that next step, then it's about getting with someone and saying, hey, how do I find that right balance between growth and income? Because I do want to get to that place where I have enough income from what I've worked to save. I have enough income that I have the optionality to just sleep all day and still make money. I mean, you know, that's what everybody says. We want to make money while we sleep.
So look, we only got a few seconds left. You're a wealth of knowledge. What's next for you on the music side?
Yeah, well, you know.
Besides getting in the studio with me.
Yeah. I think, you know, I think if you haven't checked it out, Ryan Leslie on Tiny Desk. NPR Tiny Desk. So that's one. For the ages, I have you know, some amazing musicians and vocalists. Linked up with one of my best, literally one of my best friends, Corey Lateef Williams, who came and did the show with me. Gabe on guitar, John. I can name everybody, but it was a special. And so yeah, you know, I think that's going to be. I think that's one of those ones where you just sit back and enjoy.
Well, man, I just want to say thank you, man. Thanks a lot for being here.
Yes, sir.
Listen,
and for anybody that wants to tap in, we talked about it. Just leave your number at textryan.com. Just go to your browser, www.textryan.com. You don't have to know my number. Just leave yours, and we'll be in touch.
I love it. Well, listen, people, thanks for being here on Financial Freestyle. Big special thanks to my dog, Ryan Leslie, who we hope that we was able to help inspire you in your life. Make sure you tune in next week for Financial Freestyle.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.